But we've got earnings coming in, Mangalam, so let's get straight to the management of Havells.
Let's get straight to the management of Havells. Let's talk about their earnings now. 12% growth is what we saw in their cables and wiring business, but there was an impact of unseasonal rains and extended monsoons on some of their cooling products. So we do have with us Anil Gupta, who's the chairman and managing director of the company, joining in. Thanks a lot, Mr. Gupta, for joining in. First up, to you, your team, all your employees, and all our viewers, a very, very happy Diwali and festive greetings as well. Now, if we look at your numbers, it was led largely by cables and wires, as against earlier, where it was the consumer durables business, the cooling products in particular, which would be growth drivers. This time around, obviously, on account of the unseasonal rains, the erratic summers that we had, that business saw a bit of an impact. So just wanted to understand on that business in particular, what's your outlook for the second half of this year? Because on the one hand, there is a fair amount of inventory which is there with the dealers as well. And on the other, there is that additional kicker that comes in from the lower GST too.
Absolutely. First of all, happy Diwali to all of you and to your viewers. I think you hit the nail on the head. There is, summer products, we are expecting a very big turnaround because, it was a low first half for the year. Summer products, including air conditioners, air coolers, fans, we're expecting good turnaround in the second half. There are inventories which are piled up both at the manufacturer level and at the trade level. I think it should get normalized during the third quarter and maximum by the fourth quarter. There is another disruption which is also happening. The energy ratings transition is also happening by 31st of December. It should mean better rating products for the consumers in the fourth quarter. GST reduction is a big advantage for the consumers. So all in all, there are pluses and minuses, but I think by the fourth quarter things should get normalized fully for the summer products.
How would you define normalized and how would you define a turnaround in the third quarter, sir? Because the retail offtake could increase, but the dealers are still sitting with a fair amount of inventory. So if you could give us a sense on your reported numbers, what's the kind of growth that we can foresee in the third and the fourth quarter?
So I think last year, third quarter was suppressed. So we are expecting some growth over the third quarter itself, despite the fact that the dealers are also with inventories. So I think, I would say that, the worst is behind us as far as summer products are concerned. Third quarter should see some growth, but fourth quarter will be a real turnaround.
All right. Hi, Mr. Gupta. First of all, wishing you, the team and the entire family a very, very happy Deepavali. And as you said, you're bracing for brighter times ahead. So that's good news. That said, the past quarter, the cables and wires business, if I look at the growth, well, it was a little lower than actually what most were estimating, though the margins were a pleasant surprise. How do you see things pan out from here on? That toss-up between volumes as well as profitability, how do you balance the two? And also in terms of volume growth, why was it a little lower last quarter?
So two aspects to cables and wires. Cables, we have underground cables, which is part of the business, which is industrial in nature, where we have added capacity during the last year, and that capex is continuing even this year. So we're getting an advantage of some enhanced capacity in cables, so which is showing a very decent growth. As far as wires are concerned, if you remember, first quarter was a very high quarter for wires because of high inventory pre-stocking by the dealers. That led to some normalized growth in the second quarter. I think overall, if you see, the first 6 months for domestic wires business has been very good. So I think sometimes quarter on quarter things can vary in terms of growth because of fluctuating raw material prices. But overall, the trends are very positive for cables and wires.
Right, the trends are very positive for cables and wires. Mr. Gupta, how would you view, the margins in both the cables and wires business and as we move along the electric consumer durables business as well? Because for cables and wires, the street believes that maybe the raw materials are still on the rise from here on. Perhaps the lowest of raw material prices are behind.
Yeah, so I think, lower raw material prices is good for us because, one, not only from margin point of view, but from demand point of view. So it is on the rise. And hence, we do believe that the second quarter margins are a little bit of an aberration. We do expect 15 to 16% continued contribution margins in cables and wires business. But because of the enhanced capacity in cables, distribution reach for our domestic wires business, the brand orientedness, the innovation, I think we'll be able to maintain these margins in the coming quarters.
Okay, a quick word on Lloyd's then. As you're saying that you expect things to gradually pick up in the second half of the year, put into context, give us some numbers, sir. How do you see things recover from here on?
I think, as I said, third quarter was suppressed last year. Fourth quarter itself was suppressed because we had a bad March with the independent range. So I think, if everything goes well, including despite the fact that inventory clearing would need some time, we do expect quite good growth in the Lloyd's business.
And across your segments, have you lost market share anywhere? If you could give us a sense, where have you maintained, where have you gained, and where could you do better?
I would say that Havells' continuous focus is always on not only retaining market shares in very strong segment, but also improving market shares. Even in ECD, where we have seen flat growth, we have seen market shares improve. Our PLDC share of business has gone up to almost 40% of sales. Appliances business continues to grow. Water heaters business continues to grow. The only effect, I would say, has been because of lower summer, which I believe is industry-wide. And hence, I don't think we have lost market shares in any business.
All right, Mr. Gupta, thanks a lot for joining in and giving us all of those details. Good festive season for you, personally as well as professionally. And we'll track these numbers at the end of quarter 3 as well. Thanks a lot for joining in.